Friday, June 2nd, 2017. Monaco 64, home of alternative economics and contrarian views. So we had the U.S. Job data today, non-farm payroll. It was a very weak number. The U.S. economy added 138,000 jobs according to the Bureau of Labor Statistics. The expectation was for an increase of 185,000 in May. April came out at 211,000, and at the time it was upside surprised, but they've lowered the, they revised it down to 174,000. So weak data. I've looked at some of the headlines, how a lot of the jobs we've seen in the last 10 years have been very low paid job. The unemployment rate dropped to 4.3, but a lot of people fell out of the labor force. I think it was something like 600,000 or something crazy like that. Labor force participation rate dropped from 62.9 to 62.7. So weak economy. The other number we had today, which was kind of overshadowed but is also important, is the U.S. trade balance. The trade deficit was 46.6 billion for April. It was expected 46.1. So that's a bigger trade deficit, and that's gonna lower the GDP numbers, because the trade exports minus imports is part of the GDP equation. So what else? Yeah, average weekly hours 34.4. That was as expected. Manufacturing jobs, though, were expected to rise by 5,000. They dropped by 1,000. So not good numbers. And the market's reaction. Let's go to the markets now. So as I speak here, it's 7 p.m. London. COMEX closed, the regular session at 6:30 London or 1:30 New York. That's COMEX gold. And we closed above 1275, and right now spot gold is 1277, up 11. The high was 1279. So gold closed very well the week. Looks technically very good. Silver as well, we closed just above 1750. I think it was about 1752, 51, the spot price. And gold, the COMEX closes at 125 New York time. It's 5 minutes before the gold close. Right now, spot silver 1751. So a good close for silver. We need to see more movement in silver. I think we need to, silver has outperformed gold a bit today, but we want to see silver, outperform even more. That would be more positive for precious metals. Interesting though that yesterday we got down to $17, like $16.99. So it's done well to rebound. What else? Well, the stock market made a video like I think last week about panic up. Lindsay Williams' latest video about the stock market going to the moon, and I'm going to bring up some charts of the, the Dow and the S&P, their monthly charts going back to the late 1990s. And as I speak right now, though, the Dow is at all-time highs, 21,213. The highs today has been 21,230, up 73 right now. S&P 500 up 8 points at 2438. The high's been just below 2440. And looking at first at the S&P chart, one thing I have to say, if I was looking at a chart of any other commodity or stock or bond, looking at the S&P chart is I'd have to say it looks really bullish. So here we are, S&P 500 back to like 1997. So 20-year chart. You see the tops there in 2000, 2007, and the bottom there in 2009. And then, we've had almost 10 years of very, very loose monetary policy, not only from the Federal Reserve, but also from the ECB, from the Bank of Japan, from the Bank of England, from the Swiss National Bank, central bank balance sheets. They're like all, huge now. I mean, the Fed's balance sheet before the crisis in 08, 09 was $800 billion. Now it's $4.5 trillion. Both the ECB and the Bank of Japan balance sheets are bigger than the Fed now, and they're continuing to buy stuff. So you can see here, it's breaking out. What is it a signal of? The fact that, the S&P is going up so much like that. I remember back in the 90s and even before 2007, 2008, when I worked in the markets, the core markets that I followed were bonds, interest rates, but I also followed the equity markets. Some of my clients traded or invested in both. But one thing that was always like, second nature, especially in the 90s, is that if the stock market was, bubbly like it is now, you would see bond prices drop and yields go up because, normally the central bank would come in and raise rates and not let the party get too wild. But now, as I speak, we're here at all-time highs, and Treasury yields, are still anemic. The 10-year right now is 216. It dropped 5 basis points today. We're less than 1% from the all-time low last summer of 132. And so what does that mean? What does that all mean? What I think it means is that even with the weakening economy, the stock market keeps going up. We keep hearing people say, oh, the stock market is going to crash. Cycles analysts, they're saying, yeah, it might go up a bit more and then it will crash, from October 2017 for the next few years. But people, even I, have been talking about, oh, we're going to have a correction, but I don't know. I think things are really, I don't think we've ever seen markets like this. And to me, what the S&P, and I'll bring also up a chart of the Dow. It's not too different. I mean, it's a little, the top in 07, 08 was higher than the top in 2000. In the S&P, it wasn't. So here it is. The Dow is the same, breaking out here, making all-time highs. To me, this is a sign of dollar weakness. And you might say, well, how can the dollar be weak? The Dow's doing really well. The dollar index is fairly steady. The dollar's been doing well the last few years. Well, I think, what do you use, though, to buy the Dow and the S&P? You use dollars. And the dollar is not buying as much Dow or S&P anymore. And to me, that means the dollar is weak. And it also means to me that the markets and investors, they're forecasting, I think, predicting, this action in the stock market, despite weakness all around in the economy, is forecasting the fact that central banks will never allow markets to, asset markets like bonds or stocks to go down anymore. Because if they do, it's the end of their system. It's total deflationary collapse. So the market is saying central banks are not going to let it happen. We're going to have hyperinflation. That's all I can see here. Very difficult to predict. I don't know. Maybe it will crash, maybe it won't. But looking at those charts, you know, look at the Dow chart, you know, it looks bullish. If you didn't have Dow on that chart and it was a stock, you know, tech stock, you'd say, wow, we need to buy that. So, you know, and the Dow and the S&P, you know, they represent corporate America. So, you know, if the dollar can't buy as much as corporate America, the dollar is losing value. So that's what I see from this. Where it will go, I don't know. Could it go to 50,000 Dow, you know, 5,000 S&P? Yeah, but I read recently that the best performing stock market so far this year has been Venezuela, where they've they've had hyperinflation. They've had to fly in airplanes with banknotes because there isn't enough paper money to go around. You know, there are riots, protests, and it's the best performing stock market. Go figure. So yeah, weak U.S. jobs data, stock market continued to rally. Bond yields anemic. I read that on Zero Hedge that Goldman Sachs, they still expect a hike in June 14th, but now they're saying that the Fed, instead of hiking in September, they'll do it in December. And I think the Fed is just hiking because they know, you know, the economy is going to weaken, and they want to cut from a higher rate and probably start doing QE again. And the stock market, you know, might have a blip down, but it's just going to keep going up. That's what it looks like to me, just looking at the technicals. I do like to look at the fundamentals, but I also like the technicals because it makes you, how can I say, look more objectively at things, because the prices on the chart don't lie. And the other interesting thing as well that came out today is former Deutsche Bank trader from Singapore, precious metals, admit that they rigged the precious metals market. I read the article. It said that they spoof markets, and that's nothing new to me, who worked in the markets. You know, we could see on the screen, or also before there was screen trading or in the exchange, people come in and they say, oh, I want to sell 1,000, you know, and then everyone starts selling, and they, you know, they pull the offer, or I want to buy 1,000. It's just spoofing, and they do that to the gold market, and you could see that. But not surprising. It's not a surprise to me that they've rigged the precious metals market. But it's bigger than that. I think the rigging is, it's more the controlling the price of gold, and also sentiment. Even, you know, when gold goes up a lot, like it did in 2011, they make it volatile, and they discourage the public to get involved by making it volatile. Most people you talk to think that gold is really risky. But if you hold it over the long term, gold and silver, you know, they are real money. They're safe, in my opinion. So that's it for now. So I hope you enjoyed this video. If you did, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. You can follow me also on Steemit, steemit.com, watch my videos there. If you'd like to donate to the channel as well, there's some links below in the description. I'll talk to you later. Take care. Bye.